All right, so it's recording now. Everything is recording. Let me make sure that nobody is talking because I can't tell. Okay. All right. So the first thing is what is a roll up, right? So I already explained this, but I explained it again. So a roll up is basically how you can maximize your profits on a particular move, right? So for example, let's say that you caught a big trade, right? And normally, like, let's say that you caught like XPX calls or whatever, and you made 100% on the first time. But when you're looking at the charts, you see that XPX still have more room to the upside. So what you would do is you will then take a percentage of that profit that you just made on 100%, and then you will put it into the trade again. Basically, you can most people do a higher strike. That's normally what I do. I do a higher or lower strike. If I'm doing puts, I do a lower strike. If I do calls, I'm doing a higher strike. And essentially you're doing this so you can just get more profit. So that's literally what happened today. I made I think $7,000 on the first trade, and then I ended up rolling that profit over again, and I made an additional 3,000. So I ended up making $10,000 total on the same exact move, right? So you want to do that when you want to maximize your profits. And that's literally how when people like, holding to the price target full position sounds cool, but you're better off rolling up because the market can do whatever it wants to do. Right. And essentially the way I like to do it, I keep rolling up until I take a loss. So like, or if I still see it's more move ahead and then I'm already up, like I just keep rolling and rolling and rolling and rolling and rolling until I take a loss, right? And by the end you keep rolling up, and some trades, you make a habit of rolling up. I mean, you can turn a trade that was only supposed to make you $1,000 to damn near 10, 20,000, right? So you're essentially locking in profit. Yep, you're locking in profit and you're using a percentage of that profit to get back in. So let's say that I made $1,000 on a trade and I still think that the trade has some more room to go. I locked in that thousand and I might put in $300 of that. So if that trade goes bad again, like if that trade goes bad, I still locked in $700 for the day. I'm good to go. But if the trade go good, then essentially I made more money. Yeah, I'm gonna recap my trades too. Um, okay, so as a day trader now officially, what time frame do you usually capture the daily trend on? This is a great question. So, as you guys know, I have transformed fully into a day trader. I do still swing every now and then because it's just my swinging habits, but essentially, I found the way to do like crazy returns on day trade. So I'm just gonna stick to a day trader. But as far as day trading goes, I figure, and this is me, like I said, this is just me. I figured that the 5 minute and the 10 minute work the best for day traders. Normally, the 10 minute is more for like establishing a trend, and then the 5 minute is actually day trading. I used to like the 1 minute, but I'm gonna show y'all why I don't like the 1 minute no more. And the reason why I don't like it is because the 1 minute, it's just a little too much noise for me right now. Like yes, the 1 minute can give you better entries, but it's just like mentally, it's just like I just can't keep doing the 1 minute. So I don't like to go under the 1 minute anymore. I like to stick to that 5 minute, which is crazy because I used to hate the 5 minute at first. But yeah, the 5 minute and the 10 minute. So to establish the trend, I use the 10 minute chart, and then to actually trade, I use the 5 minute chart. As far as day trades go, though, I don't really use any other time frames but those. So yeah, those are the time frames. So like don't go no, I don't use the 45 minute, I don't use the hourly for day trades anymore. I keep it simple, guys, and I'm gonna show you today. I just use the 5 minute and the 10 minute. Really just the 5 minute, if I'm being honest. The 10 minute is more for like swing trading, in my personal opinion. Like for example, Snow was a um was a 10 minute trade. I caught Snow push overnight. That was from the 10 minute time frame. So because I notice when I swing from the daily time frame or the higher time frames, I be just too early. I know a lot of you guys been with me for a minute, and y'all see that my swings be a little early. If y'all notice that, like I normally be like a day or two off, and to fix that, I came down to a lower time frame so I can time my swings a little better because I don't like holding long. So, um. Do I still like the 4 hour? I know that's gonna be hard for a lot of people to understand because, like, that's why I tell y'all, like, I'm constantly journaling. Okay. So once I'm constantly journaling, I notice things that I want to change with my strategy. And I think that's what catches a lot of people off guard because they like, Jay, you told me this one time and now you're changing it. I'm not changing the strategy itself. Like as today, you see that I still use break and retest. I still use that. All I'm doing is adjusting it to be more for me. So, like, for example, I'm still using the same break of structure. I'm still using all of that. All I did was change the time frames a little bit to time the trades better. That's literally the only thing that I did. So for my people that's talking about the 4 hour breaker structure, I still use the breaker structure, but what I do is I use it on a smaller time frame. That's all I'm doing. I'm just using it on a smaller time frame. So like instead of the 4 hour, I'm using the 65 minute, and we're gonna get into the 65 minute in a minute. But I just brought the time frames down. That way I can reduce from like being a little too early for my trades. Did that make sense? Because I just noticed, like, if y'all ever notice, I literally be right. I like not trying to like gas myself up or nothing, but I be right. I just be early or too like I be just too early. I'm never too late. I'm always just too early. So that's all I did was to help fix that. And that just come from journaling. And that's why anytime I do something, I just wait and I tell you guys immediately once I made a change. Now, if you like the 4 hour breaker structures, by all means, you can still trade those. If that still works for you, that works for you. Like I said, you got to also understand the type of person you are. I'm more of aggressive in real life, right? I'm really aggressive in real life. And I'm gonna get into that too. Be like trading calls, right? Put it this way. Trading calls. If you're a person that likes to trade calls, if you notice, you have to be a little more patient with calls versus puts. Puts, they're like quick aggressiveness, right? So you're taking a trader that trades quick and aggressive, and you're trying to make them trade calls. So for the most part, that mindset to trade calls is now going to be very aggressive with calls, and aggressiveness with calls does not work for the most part, right? If you're aggressive with calls, most of the time you're gonna get wrecked, right? Calls, you got to be a little more patient. With calls, you got to hold a little longer. For example, XPX is a great example of calls, right? XPX took pretty much all day to go 500% versus I've seen puts go 2,000, 3,000% in an hour, right? Or even fucking 30 minutes, right? So it's just, you know what I'm saying? It's just like that really comes down to knowing yourself. And that's all that I did. I just made an adjustment based off of myself. If you're a person that's a little more patient in real life, then you shouldn't really have to change the time frames. I'm just not as patient. I like to, like when I'm trading, I like to know that I'm wrong fast. I don't want to know hours later, okay, now my trade setup is invalid. No, tell me right now, as soon as I get into the trade, either I'm right or I'm wrong. That's all I want to know. So that's how I am in real life. Like I don't like to wait. Like when y'all parents be like, you ask your parents for something and they say, they try to give you the runaround. Like, no, if you're gonna say no, tell me no now. Like, I don't want to know no tomorrow, no Thursday, no Friday. No, tell me now if the answer is no. So that's just how type of person I am. So um yeah, that's really what it is. Like you down 90%. Oh, now I'm wrong. Like you done at that point. So that's all it is. Do that make sense? Um, But yeah, so just put it, and I put this in the chat already. I use for day trading, I use the 5 minute. Swing trading, I use the 10 minute. And also with swing trading, like longer swings, which was AMD and Nvidia, those are longer swings. I planned on holding them until Friday, so that's why I use the higher time frames for those. I use the 65 minute and the daily in conjunction with Nvidia and AMD. But I do believe that tomorrow they might just play out a little earlier. And if they don't play out tomorrow, then they definitely will play out after that. But I ain't gonna lie, I kind of like I'm like 80% sure that AMD and Nvidia works tomorrow. But even if it works tomorrow, I'm probably still not even going to take profits, or I might trim profits or do the roll up stuff that I told you about. But I really, really want to hold Nvidia and AMD until Friday. Um, any more questions? Come on, ask the question because y'all always ask me during the day. Y'all always ask me when the market is live and going on. I'm gonna show y'all snow. I got y'all. Consolidation can wick below your stop loss. Are you using mental or hard stop? This is a great question. So this is like the endless argument. Do we use hard stops or do we use mental stops? This is like bread and butter with everybody, all right? So for me personally, I have a weird way of doing stop losses. So I place stop losses in a lot of different places. And this definitely is more advanced. I don't recommend people trying to do that event, like starting off. But like I like to set my stop losses at different places, like as far as hard stops go. So obviously mental stops is normally when your chart is invalidated, but also you have stops where it's percentages stop losses. So how do you do this, right? Well, first of all, your stop losses should come down to sizing. That's number one. That would determine mental or hard stop. So normally, if I size lighter, I'm normally going to use a mental stop just because I have that room to be wrong. If I am trading more size, then that's normally where I use the hard stops, and then I'm okay with jumping back in and trading. So if you're just to keep stop losses simple, because this is the endless debate. If you're going to trade light size, you need to have wider stop losses, right? You need to give your trade room to breathe. Most of the time, when you do size light, that's because you're not truly, I'm not going to say you're not confident, but you're not like, y'all know what I'm talking about. It's like those trades that it's like a high chance of working, and those trades that it's like, I'm kind of iffy. You want to focus on the trades that's made like, oh, I know it's going to work, but give or take, depending on what kind of trade it is, it definitely requires different kind of size. So for example, why did I decide to go heavy on AMD and Nvidia today? Well, number one is, where did I buy them from? So I bought AMD pretty much from the bottom. So like in that sense, it's like it don't really have much more room to the downside. So in that sense, I can size a little more heavier because it don't have much room left to the downside. Not saying that it won't just go, but based off of my strategy, it's showing me that if I'm going to be wrong, it's going to tell me I'm wrong ASAP versus, if you get into it at mid-air, you're going to kind of have to hold and kind of like deal with those emotions. So that's normally when you see me put a lot of size in the trade, is normally when there's not, if you ever see me saying, oh, I'm putting 100K, 40K, 50K in a trade, that's just then that should let you know right now that he's not guaranteeing that it's going to be a winner, but he's also guaranteeing that it's not that much. If we are wrong, we're not like you're not going to be fucked up if we're wrong. That's basically kind of like how I'm putting it. People mistake it as, oh, Jay is going heavy, this trade is going to work. I mean, hopefully it's supposed to. That's what we wanted to do. That's why I went in heavy. But at the same time, like if it does work, I'm gonna make way more than I lose. Y'all get what I'm saying? So you gotta develop that mindset. Like, think about it this way: if you were in a casino or something, and you were trying to take risk, and it was one of the games or whatever everybody was winning on, and I don't know how to explain it, but you knew that you had a high probability of winning. Like, it was still a chance that you would still lose, but the chances of you losing is way lower than the chances of you winning. So in that mindset, you're going to want to put more size in. And that's literally how I trade on a day-to-day basis. And that's how I decide my size. Like, if I'm trading like dip and rips, I put more size in dip and rips, where basically a stock dips and then it goes back up. I generally put more size in those setups versus like a breakout, because a breakout, you got to understand, a breakout, it can pull back pretty hard. So I don't like to put a lot of size in those type of trades versus like something like a dip and rip or like a break and retest, because like if it's a break and retest, if it breaks below where it retested at, I mean, your stop loss is right there. versus a breakout, I mean, technically the trade really isn't invalid for a while. So you get what I'm saying? Like it's different ways to do stop losses. So it all comes down to that's where knowing your setups comes key. But let me get my whiteboard real quick. Let's go here. Hold on, guys. Share screen, the whiteboard. Can everybody see the whiteboard? Everybody see the whiteboard? All right, cool. So there are regular rules, and I'll put this in the chat, but there are certain rules that you can go by to like if you don't want to be that person to decide like, okay, do this trade get more size or this trade don't? So the first thing you can do is depending on your account size. So, you have a $3,000 account. There are rules and guidelines that you want to follow in between this 3,000. Like just because you see an A+ setup, you don't want to put in $2,500 in that setup, right? You still want to be able to manage your risk, but at the same time, you know what I'm saying? It's like you got to know what's your max, right? Even no matter what you trade, no matter what the setup looks like, you still have to always know what's your max, right? So the first thing I ask myself before I get into a trade, how much am I willing to lose? How many people actually ask themselves, how much money, if I'm wrong, I'm willing to lose on this trade? Do anybody actually ask themselves that? Like, be real, like, be honest. Like, you really have to tell yourself, like, okay, if I am wrong, how much am I really willing to lose? And then once you get to that point, because I know it sucks, trust me, I've been in your shoes before where like you tell yourself, I'm only willing to lose $500, and then 2 minutes after you get in the trade, it's already at 500. You be like, bro, fuck, like I'm about to hold it. Like it's like you just weren't expecting to get that quick. And I've been there before, but you really have to like take what you say and you have to do it. If you say that you're only willing to lose 500, by all means, once it gets to 500, accept that you are wrong and cut the trade. And I know that I'm gonna have some of my admins in here, or like OGs that's been with me for a minute, where they know that I'm a very stubborn trader. I am very bad at accepting defeat. I would literally hold something to zero before I like accept that I was wrong. So I mean, it's all like, don't get me wrong, even the best traders, it happens to, but you still gotta be like, you gotta be strict with it. Like you gotta be strict, okay? Because I'm gonna manage my risk always. It's just sometimes I just be like, all right, you know what? I'm not wrong. I just know the market. But those are the days that you just gotta be like, all right, guys, I'm wrong. I'm clearly wrong. Like I gotta cut it. I'm wrong, and we'll just get it back next trade. Because like yesterday, I thought that yesterday I actually thought XPX was gonna break down, and as you can see, we just hold it. So. And then they broke down in the morning. So that's all it happens. But like, for example, if you got a $3,000 account, what is realistically the most you want to risk? Just trying to make sure I'm trying to get y'all minds right. 300, right? 300, I would say if you want to play a little some 500 at most, but 300 is normally where you want to go. Now, people will get confused with when I say this, because I'd be like, okay, they'd be like, okay, Jay, you said I only can risk 300, but I see you put 1,000 in the trade. Okay, so what y'all not realizing is, okay, if you risk $300 in a trade and you gonna lose what 50% of that, let's say that you put $300 in a trade and then your max loss that you want is probably like 150. Hold on, shit, I do that so okay, so let's say that your max loss is 150. Okay, now a lot of people get confused when I do this is because like they will say, well, Jay, you said that you only could put in 300 and your max loss is 150, but you put in 1,000. Well, guys, it don't matter if I put in a whole fucking $3,000. My max loss is my max loss. So if I put in $3,000 and I'm saying I only want to lose 150, If I say I only want to lose 150, then I'm cutting at 150, even though I put the whole $3,000 in, right? You do it this way, I ain't gonna lie, you're gonna most likely be stopped out pretty quickly. But basically the sizing, what I tell people, the sizing, I don't really stress too much about the sizing. I stress more about the max loss. So like if you want to put $2,000 in that trade because you feel really confident in, I'm actually okay with that. But the problem is you're going to, like, the more size you put in, the quicker that max loss is going to be hit. So that's why I try to tell people you got to kind of play around with that a little bit. The max loss never changes. Like no matter what you put in, if you got $100,000 account and your max loss is 150, well, shit, if it goes negative 150, you have to cut it, right? So that's why I tell people, but the rule of thumb, I always tell them just size, the regular size, because that way they can have more wiggle room. Because think about it. Let's say that this is your max loss, the $150, and you only size 300. Well, you give yourself a 50% room to be wrong, right? Because that's 50% loss. So you're giving yourself 50% to be wrong. Versus if you put the $3,000 in, we know that how quick that shit is going to be negative 150. If you that's just one candle. Like to be negative 50%, that's a lot of price action to be negative 50%. But if you put 3,000 in with $150 stop loss, y'all get what I'm saying? Like you're going to trigger it a lot quickly. So that's why I tell people, if you have a problem with entries, if you have a problem with consistency or whatever, you should be sizing lighter, because sizing lighter allows you that ability to be wrong, right? Because you're going to be wrong. A trader that I know that's been trading for 20 plus years, they said, and I will always keep this in the back of my head when I'm trading, you're never going to get the best entry. Like, it's just like, it's not about how you enter, it's about how you exit. It's not about how you start, it's about how you finish. And literally, when I get into a trade, that's literally my mindset. It's like, okay, all right, I might not have got the best entry. Everybody likes to get those entries where it go directly in profit, but not every trader is going to be like that, right? So you have to also understand, it's not about how you start, it's about how you finish. And I'm not saying fucking try to diamond hand it back to green. All I'm saying is don't stress too much over entries. Too many of you guys like go crazy over having the best entry. Like it's going to come. It's going to come with time. But some trades work instantly, like today. The puts worked immediately. I mean, literally, we didn't have to wait for those puts to work at all today. I don't even think honestly, I don't even think the puts went red at any point. I literally don't think the puts went red. They went immediately green. But then, okay, we switched to calls, and okay, calls, they took a minute, right? So, and that's why I tell people, like I said, it's not about how you start, it's about how you finish. And this is not even just with your sizing, this is with your trading in general, right? Just because you have a bad trade in the morning don't mean that the rest of your week is done. Just because you have a bad trade on Monday, that don't mean the rest of your week is done. Too many people get so upset about a loss. How many of you guys, be honest, how many of you guys get upset when it comes to losses? Like it don't even have to be a big loss. You're just mad as fuck that you took a loss. Like it just mentally gets to you. Like, and it gets to me too sometimes. It is annoying getting lost. It's very annoying, actually, especially when you signaling. I think it's worse for me because it's like, fuck, I'm lost, and I know 100 other people lost, so now I'm just mad as hell. But overall, you have to learn how to take a loss. Like, and you just gotta take, guys, you're gonna take losses, right? If you look at did anybody check out my stats for the $10,000 account? I took 2 losses. You're going to get them. You can't avoid them. You literally can't avoid them. It's not about how you start, it's about how you finish. Always tell yourself that, right? But it just comes with not taking big losses, right? So the thing is, you can avoid losses, and I tell you this all the time, but you can avoid big losses, right? Big losses is what you can avoid. The only thing you can control in the market is how much money you lose, unless it's a swing. Swings, that's why I hate swings for the most part, because you don't control your loss only on that. Well, you can if you size like for 0 or something, but generally you can't control your losses with swing trades for the most part. But the one thing you can control throughout the rest of the market is how much you lose, right? Also, this might help y'all, and I'm gonna get more into the charts because I know that's what y'all ready for. Um, one more thing is I kind of always think this. Always think this. Guys, there has been times where brokers have crashed in the middle of trading and people then lost life savings. I always keep that in the back of my mind that like that could happen to me. And it has happened before. I had a time where I think I was up like 30K on Boeing and then the fucking broker glitched and then I ended up losing like 16K or some shit like that. Just from the broker glitching. Like there's been plenty of times some shit like that. I mean, I only had to happen once, but I've seen it happen to many people. So I always keep that in the back of my mind. Imagine a broker just goes out. The money that you have in that trade, will it hurt you? Right? Y'all ever think about that? I think that will help a lot of people with sizing. Always picture that. What if the broker just blacks out? Because they're not going to refund you your money. They're not going to refund you your money. So always think about that when you're entering a trade. That helps me a lot. I'd be like, okay, I size 100K in this trade. All right. If the market, if the broker blacks out, will I be okay with losing 100K? And then I say, yeah. I mean, really, I'll be like, fuck no. But excuse my language. But at the end of the, it's just like, okay, will it end my career? Will it end my trading career if this broker blacks out? Right. So that's another thing that helps me from oversizing. And that has helped me a lot as well. And it's just really getting comfortable, guys. You got to be comfortable with taking the loss and knowing that I'm already preparing you guys. Like I'm telling you that right. That if one thing you're going to learn from me, you're going to learn how to get a loss back times 10. That's one thing. Nothing in life is guaranteed, but that is one thing I can guarantee you. If you take what I'm teaching you, I can 100% guarantee you that when you do take a loss, you will get it back. 100%. Your next win, the wins that I produce, they get 2-3 losses back in one trade. And I teach. That's the way I like to teach. That's the way I like people to do things. Yeah, I could be a scalper and catch 10% moves and go about my day. But that I like to, especially with helping this. I mean, this is how I like to trade, but also with helping beginners, it's kind of like, you are going to take a lot of losses, especially in the beginning. So I like to teach you guys that, hey, you can get a loss back easy, like extremely easy by your next wins. Okay. All right. So any more questions? I wasn't trying to get a preaching class today. Do you gamble for earnings or do you play to run up and get out? And so normally I normally lately, I don't know why. Maybe it's because the money influx that I've been making lately, I have been more like interested in playing earnings. I don't know why. I was so against earnings. I am still against earnings. But I think that what we're seeing this year is a little different from what we've seen in the previous years. Previous years, you could play earnings and be up crazy, right? But this year, it's actually kind of different, right? The real plays comes after the earnings report, right? If y'all notice that, like the stocks like BA was literally like Boeing earnings sucked. Like they literally like it opened, the contracts were actually down a little bit. And then right after earnings, it ripped and go went 1,000%, right? So as far as earnings go, I kind of like to say like wait for after the earnings, and then if you just miss it, you miss it, right? But don't try to like play earnings. Like I only play earnings is normally just to gamble. And then because I know if I lose on the earnings, the real trade is going to come right after, and I can just catch it right after. But some earnings trades just align with your strategy. And if you feel that you got the stomach for the risk, but then all by means take it. So but I'm gonna say don't really focus on earnings. That's how you get your account took real quick. I have a trader that she hit on earnings one time, and that was like one of her first big trades. And when I say she was stuck on earnings. Like that's all she wanted to play. Earnings, 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 That's literally all she wanted to play was earnings. She is no longer a trader anymore. So yeah, don't get caught into that. Focus on taking these nice quality setups. You don't need to gamble. You got better odds at blackjack at the casino. I'm telling you right now, you got way better odds at that than playing earnings. Um Let's see. Yeah. All right, cool. Okay, let's go. Do you like IBKR so far? It's okay. I'm still getting used to it. I traded it before in the past, but I really ain't stayed with it. But it's kind of it just depends. I like it. What is your strategy to trade earnings? My strategy to trade earnings is put the money in and just pray. That's I promise you that's my strategy. I promise you. I'm just praying that it goes my way. Like no bush. I'm not even trying to be funny. That's literally how you trade earnings. You put the money in that you're okay with losing, and you just pray that it goes your way. That's literally the only strategy for earnings. Because, for example, like if y'all see the SMCI, that stock had really good earnings and they failed. They dropped 36, well, $60. They already bounced $30 back, but they literally dropped $60 with the best earnings out of all the earnings that was reported today. They literally dropped. So earnings is literally a gamble. How do you hold your trade so long, especially OTD? I've been getting this question for so long. How do I hold my trades? Holding trades definitely come with experience. Experience, money as well. Like a person that has more money is gonna likely be able or just be okay with holding longer. Experience, I've traded, bro. We've been trading XPX OTDE for so long now. So like we all know, like that's been doing it for a minute. We all know that XPX likes to pull back and then it goes up, and then by the end of the day, it'll be up 500, 1,000%. Um, so I mean, I really held it because I thought we was gonna. I'm gonna show you on the chart in a second. I thought we were gonna go close that gap fully, so I was just holding to close the gap, right? We didn't close it. We did get close, but we did not close the gap. But that's what inclined me to hold longer. And then I mean it's just with experience. And also understand I don't think people understand this, but I be trimming, right? People really don't notice. Like there are trades where I will hold full position to target, and that just comes with experience. But for the most part, I am trimming. So by the time we even got to the end of XPX, I was already out majority of my contracts. Like, well, today was a little different. So like I was actually like super confident on XPX. So the first trims, I actually trimmed light and I kept more contracts closer towards the end. That's how my P&L was able to reflect that. Um, like I kind of like I started XPX off with like I had a nice size on XPX. Like for the $10,000 account, I had like 40 contracts. And I literally held most of like 30 contracts all the way into close. But like it just depends. You just get better with experience. That's all. Like you just gotta practice it. Just trim, and like by the time you're gonna be able to start holding your trades longer. I want to know what you saw another trader or two seeing in coin. I'm gonna show y'all coin in a second. I put the details in the chat. I thought I did. Okay, I'm gonna check that. Put 1,000 in because you bored. Yep. What's my strategy? Yeah, blackjack. Yeah, blackjack. Yeah, my PT was 4,520. It did not hit. It's okay. It'll hit tomorrow. I think. How do you know when you want to make a trade on OTD, when you want to put more? Oh, this is a great question. So how do I know when do I want to do an OTDE and when do I want to put more time? So that comes with the time frame difference. So if I'm taking the trade on a 5-minute time frame, then you can probably guess that those trades are going to happen like today, right? If I take a trade off of like a daily time frame or 65-minute chart or 4-hour, whatever chart you want to use, those are higher time frame charts. So like those trades can happen today, but at the same time, it's not very likely. So like if you see something that you like on a daily for SPY, you not going to get you don't want to get OTDE, right? Because it's a daily time frame, so that could take a couple of daily candles to play. But I'm signaling trades like today, pretty much off of the 5-minute. We're actually all of them were today. We're off the 5-minute chart, So those trades are going to happen in 2 days. So therefore, I went ahead and picked OTDE. You got that capital and strategy to hold what you see. Yeah, I got something to tell you, folks. I got something to tell you. Yeah, let me know. What you see in the swing QQQ? Okay, I'm about to show y'all. How do you choose strike prices? Do you choose? So yeah, strike prices are really like my profit target. So as you know, like today, I thought that well, I believe that AMD is going to go to 115. So I picked the 115 strike. That's like the easiest way to do it. I picked like the 115 strike. I don't really do all of that extra stuff where people like they go look at the Greeks and all that and this and the volume and the open interest and they do all of that. No, I normally just pick where I think the stock price is going to, and then I get that contract. I keep it simple, y'all. I don't try to like confuse y'all with a lot of stuff. I keep it simple. I also go by price as well. I know that I don't like paying over $300 for a contract, really over 200. So I kind of like to stay with those contracts around $200, 200 and under. And I know that if I signal anything over 200, y'all not going to take it anyway. So I normally generally like to look for contracts that are under $200. And I'm okay with waiting a little bit so those contracts can get under $200. Like I have a middle ground. I don't like going too far under $90, but I also don't like going over 200. So I try to stay in between $90 and $200. But to keep it simple, choose where you think it's going to. If you think that it's going very high, then most likely you probably not ready for that trade. You should know exactly where that trade is about to go fairly quickly. Now, NVIDIA, I will say, I know people going to say, well, Jay, well, you pick 470 calls on NVIDIA. Well, the reason why I picked 470 calls on NVIDIA is because I do see NVIDIA going to 462 by Friday. So even though I don't think it's going to go, I kind of can almost guarantee it's not going to go to 470. But then again, you know, that's a pretty big jump. So even if it don't go to 470, it will still, those 470 contracts will still be up very nicely if NVIDIA goes to 462. Just because we bought it at 440 something. So that's why like stuff like that, I picked that simply because of the price. Now, do I wish I would have went with 460? Yeah, I would have preferred to buy 460, but I also wasn't prepared to pay that much. I think those contracts were like $500, and I wasn't trying to pay $500 for a contract. So, all right. Next, let's get into the fun stuff. So, why am I taking these trades? All right, let's do it, and then we will call it a day. So let me see. Hold on, guys. Wait, no. Okay, what screen are y'all seeing? Y'all seeing my chart or y'all still see the whiteboard? Chart. Okay, cool. All right, so let's get into the fun stuff. Here we go. I already kind of went over a lot of these trades, but I'm gonna just go over it really quickly. So let's first start with XPX trade, right? And I already put this in the chat, but some people be needing me to go over it live. I don't know why. So let's see. I am using TrendSpider as well. We can take this off. I'm using TrendSpider. It is a charting platform. It costs like $200. If you want to check it out, you can. It's up to you. It doesn't make a difference. But all right, so let's start off the first trade that I took today. So the first trade that I took was XPX puts, right? I took XPX puts. As you see, we got a gap down. So let's go into why did I do this? So how many of you guys heard me say momentum precedes what? What do momentum precedes? It's price, right? Momentum precedes price, guys, right? So what I mean by that is if price momentum comes before price. And I know that's going like a lot of traders not going to want to hear that or agree with that. But at the end of the day, like you could try for yourself. Momentum comes first, right? If a stock is gapping up, then I mean, regardless, I mean, obviously we want the charts to agree with it, but regardless what's happening, momentum is going up. And for the most part, it's going to continue to go up, right? If momentum is going down, it's going to continue to go down. So that's number one. So right off the bat, we seen that we gap down. So literally as we gap down, I'm like, okay, we gap down, I'm going to take puts, right? There's a little more to it, but for the most part, and I'm gonna get into that in a second, the most part, it was a simple gap down momentum trade. This is literally momentum. We had bearish momentum from the gap down. That means bearish in control. And I tell you guys this all the time. Whenever we have a gap, price likes to continue in that direction. So if we have a gap up, price likes to continue to the upside. If we have a gap down, price likes to continue to the downside. Did that make sense? Cool. So this trade was a little more advanced. I mean, you didn't really need flow for it, but I mean, for the most part, it was literally a simple gap down continuation trade. But there are some things that could have helped you as well. Flow helped this trade just a little bit, maybe like 5%, not really. And the reason why was because I was trying to catch, I seen on Flow yesterday. Flow is order flow, basically when people are buying and selling options. So basically you get to see what they're buying and selling, normally bigger traders, bigger money, and you get to kind of like see what they're trading and you can kind of like follow the money. So yesterday, and if you look in the chat, I also said this. I said, okay, well, I keep seeing puts being bought. Like I don't like this whole time. If that was why we was in XPX puts yesterday that we lost on the last trade of the day. And I'm just like, bro, I keep seeing puts. Like what? Like I'm looking at it. It looked like it was a bear flag going on, like a little triangle. It was a lot of this consolidation. I'm thinking it's about to break to the downside. And I'm just like, okay, I see puts. It's consolidating in this range, like it's a little flag or rising wedge, whatever you want to put it. I'm just like, bro, I keep seeing puts. I keep seeing puts. And literally the puts just kept getting torched, right? So when we seen this gap down this morning before the market opened, it already gapped down. I'm just like, oh shit, okay. Those puts from yesterday, they were for today, right? So they were buying them yesterday on Flow. Because remember, in the chat, if anybody remember, I kept saying, why the fuck, excuse my language, but I kept saying, why are they steady buying puts? I do not like, I'm saying, like, I see that they're trying to get the flag to break, but they keep averaging down. So that's what they were doing, right? They were buying puts for the gap down for today. Okay. So once the market opened, mind you, I'm remembering that from yesterday. And I'm like, okay, well, now that we gap down, boom, we got the puts from yesterday. I'm gonna get a momentum trade to the downside. So literally, once I got that opportunity, I took puts to the downside. Okay. Do that make sense so far on that first trade? It's pretty simple momentum trade. Like people are making life so hard. All right, next. So how did I get my target? Well, first, and I taught this in a previous class, and you can go, it's still up. I didn't delete it. I was talking about gaps, bull gaps and bear gaps. And I told you guys, and let me draw it right here. I told you guys, whenever we have a move up, and let's just say this like a little, let's just say this like, we're going to just make this a pullback or whatever. Okay. And then we have a gap, right? Let's just say this is the gap. All right, so let's say that right here is our bull gap. Okay, we got that gap, and then price gapped right above, and then it continue higher. Okay. Now, remember what I told you guys. Whenever we're looking at bull gaps, I call these bull gap supports, right? Anywhere in this gap is going to be what? Anywhere in this gap is going to be, it's going to act as a form of what? You got your buy orders, you can say demand, but support, right? So what I used to do was I used to put support levels above the gap and below the gap, but I guess now the market wants to go in the gap nowadays. So basically, we call this whole gap support. So how do we know, like, basically price can come down in this gap. We don't know where is it going to bounce. We don't know if it's going to bounce here and go up. We don't know if it's going to come 50% in the gap and go up. We don't know if it's going to come all the way to the gap low and go up. Like literally, I've tried all of them. This is a funny story. I literally didn't try all of them. Like I've tried every single thing as far as trying to my best to help you guys find the correct bounce with these gaps. And literally, I just came to the conclusion there isn't none. There's none that can tell you exactly where it's going to bounce in the gap. There's literally nothing. So what I decided to do as a trader, fuck it. The whole thing is a support level like that. And actually, after doing this, it's actually correct. So that comes with experience and back testing. And that's when I found out, like, okay, some days it just want to come to the top of the gap and bounce. Some days it want to stop right above the gap and bounce. Some days it want to come all the way in the gap and bounce. Some days it want to come to the bottom of the gap and bounce. Some days it want to come to the lowest point of the gap and bounce. Right. So I eventually stopped fighting it. And I was just like, you know what? I'm just looking for whatever it decides to do. I'm not about to try to guess when it's going to bounce and none of that. I'm just going to react to whenever it decides to bounce. So throughout my back testing phase, I noticed that a lot of times what the price likes to do, especially right now in this bull market, is it likes to actually come below the lowest point of just that push up, right? Like, so you have this gap, but the lowest point before the gap up, I normally do the candle, but sometimes it'd be like the lowest point. I'm gonna show you that in a second. But normally, this is considered the last line of support for the bulls in the bull gap. Same way with bears, right? So this is the last line of support. Okay. And if you're a structure trader, I'm not doing nothing different. This is literally nothing but a what? What is this? What is this right here? Nothing is different. What is this? This break, exactly. This is a break of structure. Okay. So that's all that it is. But I noticed that, you got the breaker structures, but then right after the breaker structure happened, how many people have seen where, you'll have a breaker structure and then it will just do this. It will just rip like crazy after it breaks that structure. Right. So I started noticing like, oh shit, that's a strategy. Like that can be a lot of money. So like, I'm literally like, let me dig deeper into that. Let me back test that. Let me try to find out how to capitalize on this move, right? This move is literally like, this is a crazy, like this is literally come from back test. That's what I tell you all the time, the back test. I'm like, bro, okay, I understand people want to catch the quick breaker structures. And this is a real strategy. Like people literally, they catch the breaker structures, they catch this little move, and then they be done for trading for the day, which I've seen a lot of traders do that. They're very profitable doing that. I guess that's fine. I mean, you're doing it in the right sense. But I'm like, shit, look, if I have to day trade now. You have to understand. I switched from being a swing trader to a day trader. So I had to find a way how to still get my 100% trades, right? So I literally was like, bro, this is a 100% trade that I'm missing out on. I'm like, I got to find a way to capitalize on that. So that's how I came up with it. I'm like, I got to find a way to capitalize on that. So that's when, and I know other traders do this. So I'm not trying to say that I'm the one that created it. It's just that I got a different approach. Some people do the opening price. I know one of the traders, Rake Trades, he do the opening price where it goes below the opening price. That's cool. That works as well. But I personally like if it goes below that, if we have a gap, it goes below that bull gap, bear gap, whatever. And I like for it to pull back above. Right. Did that make sense? Cool. So, and I'm gonna get into how to back test and all that, but let's go look at the charts and actually see this, because maybe it's a little confusing, but let's go see this in the actual charts, and that way you can kind of see. So, also real quick, if a bull gap isn't invalidated, it's still going to be valid on the next days. So I just want to put that out there. Okay. So let's first talk about the price targets. Okay. So remember, when we're looking at this, ignore what just happened over here. Look at this. We did a what? What happened right here? Market open and we did what? We created a what? What is this right here? A gap up, right? So remind this is a prime example, which I should have listened to my own fucking rules. My bad, y'all. Excuse my language. It's a little crazy today. But what happened? I said if we gap up, it's most likely going to do what? And I didn't follow my own rules in this situation. And I'm gonna show you why in a second. But normally, if it gaps up, it's going to stay up. But look at this. Look at this. Look at this. Check this out. This is literally what I'm talking about. You don't know when it's going to bounce. That's the whole purpose. This particular gap decided that it did not want to come in the gap. It bounced at the support level of the gap, like the top of the gap. It literally gapped up, boom, pull back, and then it just bounced clean off the top, right? Not every gap is going to do that. Some, like on this one, look at here. Y'all see this gap? What happened right here? What do we do? What do we do right here? We gapped up, right? And look what we did. This time, we decided to come all the way in the gap. We actually caught this trade. You know, that's that crazy trade that we caught. But it's like you see the difference. The same thing, it just happened differently. And that's why I tell people the market is never going to do exactly what you want it to do. You just got to learn how to react to it. So this trade right here, we decided that we did not even want to come in the gap at all. And we just bounced right off the top of the gap and ran. This trade, we decided that we wanted to come into the whole entire gap. Actually, we wanted to break like that, go through the gap, and we want to come down to that last candle's low and then bounce. And you can literally, I told you on the weekend, you can do this all day long. You can go to it. Like, for example, we had a gap up here. It did not want to come all the way down here. It literally gapped up, came a little bit into the gap and bounced. Like, and we can do this all day. This day, it just came all the way through the gap, and then it did not bounce. It just kept going down. So y'all see what I'm saying? Like, we can do this all day. Like, for example, this one came halfway in the gap and then bounced, right? Look at this. See, it came all the way, it came halfway in the bounce and bounced. Did that make sense? Like it's so far, which I've seen, like it's always, I just got confused. Okay, stay with me. I'm really good at explaining stuff like this now. So I got you. So all I'm saying is I want you guys to understand that the market is never going to do exactly what you want it to do, right? It's never going to do that, right? So, like I said, in this instinct, I want to stay with me before y'all get to before y'all try to like move on. Let's focus just on the gaps right now. We'll get into like next days and all of that. Let's just focus just on the gaps. All I'm saying is you have price and you have to turn off pre-market. Price gaps up and gaps down a lot, right? And those gaps are actually very good trading opportunities if you can catch them. So all I'm saying is, look, if you have a gap right here, gaps, the bounces. So we have a gap up. Just keep it simple, guys. If we have a gap up, what are you looking for on that day? Calls, right? Now, yes, there's going to be times where it will gap up on a day and then it will just go down. There are times, but that's the part of being the trader. We don't know when that's going to happen. We don't want, like, too many people, they care too much about that. Like they be like, well, Jay, what if it decides to go back down? What if it decides? I don't care. Like some days you're going to lose, some days you're going to win. That's why I tell you, you have to be okay with losses. The goal is to trade the strategy over and over and over and over. Some days your strategy isn't going to work, but if the strategy proves that it works over time and it works most of the time, then you're good. There are going to be days where, you know, we have a gap up and I'm looking for calls all day and then the market just decides to break below. There's days that happens. But if you look here, for the most part, I mean, normally if it gaps up, it normally continues to go up for the most part, right? So what I'm saying is now that you understand that part, yeah, like in this, especially in this type of setup, the losses are going to, like, you take a loss on trying to play calls on a gap up day, because remember what I said, momentum precedes what? What do momentum precedes? You should, every morning you wake up in the market, you should be following what? You should be following momentum. You want to follow where the money is. That's what you want to do. I know people, I don't know why they put this on. They did this for retail traders. It's very serious. It's very obvious. They try to tell you guys don't chase. And by all means, yes, don't chase. But at the same time, You still want to catch momentum though. You want to ride where the money is going. That's where you want to be at. You don't want to be the only one that puts if the market gapped up. You don't want to be the only one that calls if the market gapped down. You don't want to be that. You want to ride wherever the money, like what they say, well, that's the song they saying, where the money resides is literally in trading. Where is the money at? If we gapped up, 80% of the time, we're going to keep going up. Either we're going to chop or we're going to go up, right? Go with the money. Follow the money, right? I know it look cool and all when, you know, you catch the puts and all that, or you catch the calls from the bottom, but follow the money. That's where the money is at for right now, okay? So when we're now that you understand that part, now you shouldn't be worried about puts right now if we're talking about gap ups right now. So look, we're looking at gap ups. So all I'm saying is whenever you have a gap up, not every trade is going to be a perfect bounce off the gap and go up. All I'm saying is the gaps come in different forms, right? For example, let's go back. Now that y'all first of all, did y'all understand that first part where, you know, you want to follow the momentum, you want to go where the money is going? Y'all understand that part? Cool. Just that is you do that, you're going to see a lot more wins. I guaranteed you that. You're going to see a lot more wins. You're going to still take losses, but you're going to see way more. You're going to see literally a 360 in your trading account by just sticking to that same exact rule. Gap up, that's bullish momentum. Gap down, that's bearish momentum. Don't worry about no fucking reversal. Don't worry about none of that. Gap up, bullish momentum. Gap down, bearish momentum. That's all that you should be worried about starting off, okay? So check this out. Boom, gap up. I'm about to make y'all say it with me. Gap up. What are we looking for? Cost. If it dips, we are still looking for what? Cost. If it goes if you see a fat red candle at open after a gap up, what are we still looking for? Cost. Why? Because the momentum essentially was bullish. Now, there are days where it will do some reversal shit, but overall, the momentum is still bullish, okay? So now look at this gap. So now that you understand that part, let's get into the actual gaps, right? And I swear, guys, it's only gonna take about another 10 minutes and I'm done, right? It's real simple. I'm doing this every day. And then I know when people are like, well, Jay, you know, I know you teach us one thing and then, you know, over time you switching. This has worked for over 50 years. I think this is it. Like, I don't think I'm gonna change after this. Like, I think I obviously I'm gonna make little adjustments as time go by, but I mean, you can ask any trader that's been trading for 20, 30, 40, 50 years. They just been doing, you know, you gap up, think calls, you gap down, think puts. Keep it simple. They make trading so hard nowadays. Keep it simple. So we had a gap up. We're looking for calls. Okay. We had this gap right here, this green area. And mind you, whenever you have the gap, it can bounce anywhere in between the gap. We don't know where it's going to bounce in the gap. We just know that we're looking for calls in the gap. Does that make sense? We don't know if it's going to come down here or here or here or here. We don't know that. We just know that that's a support level. I want to be mindful of puts. I'm not saying now I'm going to have my bulls in here. I already know I'm in my bears. I already know. They're going to say, well, Jay, I still made 200, 300%, you know, taking puts in the bull gap. All right, that is totally fine. Congratulations. You won a fucking cookie, okay? But for the most part, I'm trying to teach you how to be traders for the long term. You don't want to get caught being in a bull gap support taking puts, okay? You don't want to be caught doing that, right? So keep that in mind. So next, this gap right here, boom, popped up at open, came back, pulled back. Even though it was pulling back, what did we do at the open? What did we do at the open? What do we do at the open? Even though it pulled back. I mean, if you elite like this, you will catch a move like this. I know traders that did catch this move, right? But I'm just trying to get y'all like the straight truth, like uncut stuff. So this is what I did, okay? Whenever I'm drawing the gap, I got the actual gap and then I got the gap candles low, right? So I don't know which one is going to bounce at, but I know that if it is going to bounce today, it's going to bounce at one of those, okay? So look, we had this gap. We could have bounced anywhere in this gap. We did not. I told you guys when I took this trade, I lost on this trade at first because I was looking for a bounce up here. right? I took like 50K in calls in this area, and then it ended up keep dropping. I lost like 30 bands on this trade. I did not signal it to you guys because these candles were strong as shit, and I didn't want to like get you guys caught up in it. So I waited for a better quality setup. So then once it got to this last line of support, remember what I said, we got the gap. That last candle, I say 1 or 2 candles, depending on the setup, depending on how big they are. This one, the last candle did just fine. I literally, as it got there, I signal calls, and I already told you guys this trade. I signal calls literally as we touched here. Why did I signal calls? Because that is the last line of defense, right? Also, for more elite traders, I'm going to teach you guys flow this week, so don't worry about it. It takes too long to teach in one, like something like this. I want to do it like kind of over the weekend so we can go over it. But here we go. So flow helped a little bit because when it was dropping, you started seeing calls come in on the flow. So when I teach you guys flow, you don't need it. You could literally just took the bounce. You don't need it, but it does give you a little edge because I know traders that don't use flow that caught this same exact move, but I caught it a lot quicker because I had like an extra tool. Y'all get what I'm saying? Does that make sense? Like tools don't make or break you. It just gives you maybe another advantage that other traders don't have, right? Does that make sense? Because I know y'all be thinking like it's like a hidden gem or something, but like you didn't need this to catch this trade. I literally know traders that caught it perfectly. Once that it did show this wick, a lot of them got on this wick, or a lot of people got up here. But the flow did help me get into, like, it helped me signal to you guys faster. Because when it was dropping, I'm like, oh shit. Like I'm talking about like a shit ton of calls. I'm talking about back to back XPX, spy calls. I'm like, oh shit. So I'm like, all right, bet. That makes sense for it to be spy calls coming down to this last line of defense. So in my mind, I'm like, all right, well, all right, this is a low risk trade. Either we bounce here or we break below. And it's a very low risk trade. Like literally, it's going to tell us, like I said, I like to know if I'm wrong immediately. It's going to tell me if I'm wrong on this trade immediately. Why? Because literally the trade invalidates right below here. Do that make sense? It literally invalidates right below here. It like as soon as it goes fully below there and you know that it's going to stay below there, it invalidates itself. So it's like great risk to reward for this upside move. So I signal calls right here. It bounced perfectly, right? Made a nice bag off this trade, right? So here we go. Let's go into today's trade because I know y'all don't want to keep hearing about old trades, all right? Let's go into this one. So this trade is a little more advanced, but over time you will get better at it. All right, so if you look into the chat, and I know that some of you y'all be trying to like understand what I'm calling stuff at the same time, but if you really look at when I'm signaling stuff, I'm also talking about the trade as I go. Literally this morning, I said, I'm writing down puts. I said, be ready to bail our last contracts if we bounce at bull gap. Did I not? Do y'all remember me saying that this morning while we were in puts? I said, be ready to bail these last contracts if we bounce at bull gap. I said that, right? Why was I saying that? Because before this move happened, was this bull gap support ever broken? Was it invalidated at some point the previous day? Was it ever invalidated? No, right? We have never came back below this level. And I know y'all gonna talk about, like, I ain't talking about over here. When you trade in bull gaps, focus on the last 1 to 2 days. That's it. Like, don't go too far if there's other gaps in between that were invalidated, right? So make sure that makes sense. So when we're looking at this trade, this is a gap up. Okay. And then the bull gap support was what? Look at this. I want y'all to look, ignore this. Where was the last line of defense for the Bulls on this day? What was the last line of defense? The gap up candles what? The gap up candles what? The gap up candles what? The gap up candles lows. Okay, there you go. This is the green gap up candle. Like I said, 1 or 2 candles. It's up to you. So there we go. So that was the gap up candle low. Okay, hold on. Okay. So as I took puts this morning, why did I take puts, guys? Why did I take puts? Keep it simple. Momentum. I took puts because of the what? Momentum. Okay. So I rolled the momentum because why? Momentum precedes what? Price. Exactly. There we go. I think y'all learned it. Is it clicking yet? Is it clicking? I feel like I always get it start to click after a while. Cool. It'll take it's because it's something new. You just gotta practice it. This is a day trading strategy. I haven't really went over day trading strategies in the past. So that's probably why a lot of people are still confused because I don't really like I wasn't really like stuck like a hard day trader or something. This is a day trading strategy, by the way. You can swing off of it, but this is a day trading strategy. Okay. So as we rolled the momentum down, my price target was the bull gap low. That's where I got the candles from. I'm gonna answer that question in a second. So literally, as we was riding it down, I'm already trimming my contracts. That's why I say trim, 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 trim. Do this bull gap support matter? This is where I'm about to get y'all at. Do the actual previous day bull gap matter? This is where I'm finna get y'all. So if we have a gap up the previous day, but we have a gap down the next day, actually the actual gap itself do not matter. I just got y'all on that one. The gap does not matter, but the last line does. So put that in your notes. So if we had a gap up and it's the same way, don't get confused, y'all. The only reason why I'm saying it don't matter is you can see they literally did not give two F's about this gap right here. But the support line does. Okay. And this is for day trading only. Swing trading is a little different. The actual gap does matter. We're gonna get into that a little later. But overall, the only thing that mattered on the day trading perspective was that last line of defense for the Bulls. I mean, for the Bulls, yeah. So we caught the momentum, we wrote it down. Where did I get my price target to sell at? Was here. So this is where, when I got to this point, I was already out what? I literally was already trimmed down to my what? By the time we already got here, I was already trimmed down to what? Runners, basically runners, right? Because guess what? When it does get here, it could bounce, and which it did. So why did I not get stopped out on the bounce? Because I was already in runners. Guys, you have to start taking your profits. Like as the move is going down your way, especially getting candles like this. These are huge momentum candles. Like these are huge. Like this is like crazy candles. Like going 100% quick. You have to be taking those, right? Like you're literally trimming. If I'm buying 40 contracts up here, boom, first drop, boom, I'm out 10. Boom, I'm out 20. Boom, I'm out 30. By the time we get to the actual target I was looking at, I only got 10 left. We pull back. All right, that's fine. If we go too high, I'm gonna cut the last 10. I'm up in profit from the first trims here. But then if we break below, as we broke, this is where experience came in, and you get better at it over time. This is literally where experience comes in at, right? But what I did was so nice today. I was in runners by the time we got here. It pulled back. As it was breaking down, those contracts that I was just in, premium spiked. Why they premium spiked? What did I add right here? I added what? To get more profits? I added roll-ups, right? I used a percentage as I was selling profit, I then used some of that profit to add roll-ups to then chase more profit. And literally, as I got this candle, I'm not for roll-up. I literally was in and out. Why was I in and out though? We're gonna get into that in a second. But overall, like I'm literally in and out. Like boom, boom. I'm up almost 20% here. Boom. I was up like what? No, I was up like 160 here, I think, or something like that. Pull back. It went down to back to 100, came back, went up 200%. As I was selling those 200% contracts, I used a percentage of those contracts and I bought more roll-ups, and then I wrote it down, caught those 400%, and I'm out. It has to be quick, 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 quick. Momentum dies quick. You have to be quick, right? And that was that. So why did that make sense for that trade so far? That was two trades in the same move. And do you need to leave runners? No, but if you want to catch more of the move, because Actually, I sold these too fucking early because these contracts actually went up. Those roll-ups went up like crazy. Like I think they went to like 350, if I'm not mistaken. They went up some crazy percentages, but I was only looking for a home run. I told you, I like at the 100%. Sometimes I'm just out. And also another thing is I don't like playing around with these areas because from experience, I noticed that sometimes when we get to these areas, it do like to do shit like this, a dip and rip. I literally like over time, like from just experience, once we do break below a support, I'm pretty sure y'all have seen it so many times. Once we break below a support and you try to buy puts because it broke support, and it'll just ripping back above. So that's like was my mindset. Like I'm always thinking like, what's next? What's next? What's next? But I'm also gonna tell y'all another thing that got me in the calls too. But levels for runners. So this is a great question. So as far as level for runners go, so I know people be like, okay, Jay, what is your next target? So I know this finna get y'all totally off guard. I know this finna get y'all off guard. All of the years I've spent teaching, all of the years I've spent teaching, and I'm finally finna say this. I don't really care about supporting resistance. Like I literally don't care. When y'all be asking me what target stuff I'm going to, I really like on a day-to-day basis, I just like have new shit. Like I don't I know that a lot of people are like so stuck on supporting resistance, but I just over time, me personally, I just seen how shit just be getting invalidated every fucking day. So I just like stop like for day trading. Swing trading is a totally different story, but for day trading, I just like bro. Honestly, they make their own levels in the morning. So for me, I just wait for the morning to get my new levels. So that's literally what it is. Like I know some people like, oh Jay, that's not being a real trader. Look, the shit work for me. I don't know what these people didn't got. Like, oh, there's like one way to trade. This works for me. This keeps me from being unrealistic. Like this literally keeps me from being unrealistic. I only like when I'm making levels and stuff to play off of, I'm using the previous days. That's it. That's it. That's all I care about. Previous days, gap, whatever for day trading. That's all I care about because with day trading, they do new stuff. Maybe a news report that came out. Maybe somebody like Finch decides to come out of nowhere and downgrade the market, and they don't care about your support and resistance no more. They don't care about those levels that you had. That's just my personal take on it. Like, how many times have you made support and resistance levels, and then some news probably came out and the market literally just said F your support and resistance? Like, how many times? Let's be real. I mean, at some point, traders have to really be real with themselves and understand that, like, it's been so many times where I will literally, back in the day, I will make support and resistance levels, and then some fucking news will come out, and then the market, my support and resistance levels didn't hit. So now I don't even like tomorrow. Tomorrow, I literally don't know. Like, I don't know what we bouncing off of. If we get a gap up, I don't know that until tomorrow. I literally don't know. Now, obviously, I do have some targets to the upside based off of today's price action because we had this bear gap, right? So look at this, guys. Look, we got this bear gap, and it's the same way. It's the same way. Okay. It's the same way we would do the calls. What is the last line of defense in a bear gap? Anybody know? What's the last? What's is this correct or am I wrong? Is this the high? Cool. Hold on. What did I say? I thought Spy was going to go to today on XPX. What did I say? And where do you think I got that from? Is it making sense now? It literally, I said 4,520. What did it say right here? This is literally 4,520. I know for my technical people, 45, 19, 81. But it's 4,520. Shut the hell up. All right. It's 4,520. You'll be all right. Okay. It's 4,520. Okay. And what did I say I thought Spy was going to go to? 4,520. I mean, it's right there. I made that. Okay. Yeah, so I'm looking at unless it makes so you gotta understand, right now we're speaking, for right now. Tomorrow it can make a bull gap and then the whole thing changes, right? So, like, for example, we see how we moving up tomorrow. So because I think that'll help y'all as well. So let's say that tomorrow, which I do think this is going to happen, but like nothing is 100%. Let's say tomorrow, I'm about to actually really get y'all right here, and then I'm gonna be done. Let's say tomorrow we do this. And let's say this is where price is at. Okay. Tomorrow, what is the trade going to be? I mean, we're still looking at this level, obviously, but like it, you know what I'm saying? Like tomorrow, what is like, yes, because I'm gonna have my bear. I don't know what's his name, Yos YOS. I know he probably looking at this like, ooh, I can't wait to get to 4-5-20 to pay puts. I know if he on this class, what he looking at. But you know, yes, we do know that is the previous day bear gap, last line of defense. So most likely, you know, that is a potential play for puts. But what did I say at first? This is where I want y'all to see if y'all growing as traders. What are we looking for if the market does this tomorrow? Calls, right? Yes, it can reject from here, but what are we looking for? We're looking for call opportunities, right? So if it does gap up, yes, we can potentially think that that's going to, you know, reject, but we're looking for calls. We don't care about a fucking rejection if the market ain't gapped up. Yes, it can reject, but we don't care. We do not care. If it just happened to reject, then all right, cool. If you caught the rejection, you caught it. But I'm not gonna waste my life by doing that. The real trade that I'm looking for is it's about to really click right here. We gap up. This is the price action. So we stop right here before close. We gap up. We're gonna have, I drew this gap so wrong. Okay, we're gonna have this move from right here. And then what is this going to be? What is this level going to be? This like low right here. What is that going to be? Bull gap last line of defense. Okay. That's the last line. That don't mean that we're going to come there, right? We could bounce in this gap, but this is our last line. So tomorrow, if we gap up, boom, look, we gap up, guys. Look at this. If we come back here, we buy calls. And what do you think if we do about, what do you think my price target is? What do you think my price target is if we come all the way down there? Like, what would be the first price target? 4-5-20. Oh my. Is it like, obviously, yes, this is going to be another price target, but the first price target is going to be that bear gap resistance, right? That gap, the bear gap resistance, the previous bear gap resistance. Okay. And then we can go past higher. That would be my first target. Okay. Do that make sense? Like, did that click? Is anybody confused? Like, I feel like that should have clicked. Cool. And it pays like crazy. Like I'm telling you, it's been working for 50 years. I'm mad that I did not trade stuff like this in the beginning. We probably wouldn't even have a Discord right now. I feel like everything happened for a reason, actually, if that's the case. If I would have known about this 2 years ago, I ain't gonna sit here and lie to you. It won't be no Discord. I'll be too rich to ever even talk to anybody. Like, I'll be literally that rich, but it's okay. But I would say this. If you want some realistic stats on this strategy, I've had my most 100K days trading this. I promise you. It's crazy. Like, I literally cannot, like, it's been crazy, like, how good this has been working. And it's been, like, this is one of those that's been working for 50 plus years. So it's like, and everything is still the same, though. Like, I'm not doing anything differently. Like, everything I'm teaching you is still the same, because if, let's say that, and I swear I'm done after this. I keep on saying I'm done, but I swear I'm done after this. Let's say that it breaks below here, okay? And then it breaks back above, and then it pulls back again. What is this going to be? What is this going to be? It breaks back, so we got the different rib. But also, what is this? The same stuff I've been teaching you. What is this? A break and retest. It's the same thing. Hold on. If you can't catch the break and retest, we enter right here. What is this? If we enter right here at this high, break a structure, it's literally no different. It's nothing that I'm teaching you was different. Hold on. Let's do this. Hold on. Because I still got my people. Hold on. What if we do this? What if we have this if you want to trade this and then we come back and do this? What is this? Order block. I mean, I only use them on a daily time frame. I told you they work on any time frame, but order block. Boom, bounce off again. You got 2 entries. That's why I'm saying, like, it's the same thing. It's the same. It's literally the same thing. It's the same. I'm not teaching you nothing different for anybody to say, oh, you're changing the strategy. Nothing has changed. It's the same thing. So, all right. So last thing, let's get into the actual trade of today. Let's get into it. Let's get into the calls part. All right. Let's put it all together now. Let's put it all together. And y'all can go practice it for yourself. And it's going to take time. It's going to take time to get used to it. But once you get used to it, I'm telling you, I wish I'd known this at first. And it just came from back testing. It literally just came from, I'm like, bro, I can't find a way to time the gap bounce. Then I start noticing, well, hold on, this whole thing is support. All right, so now let's look at the last. So we caught the puts, momentum precedes price. Now, how do we catch the reversal? The reversals are going to be a lot more structure based, like a lot more. You need a lot more stuff to happen, right? So, boom, we started consolidating, and guess what I start seeing in here? Anybody can guess what I seen on the flow. This is where flow gave me an extra thing. I started seeing calls being bought. Also, flow also helped because calls were being bought on this drop down as well. So it was like, okay, potentially when we get to this bull gap, we're probably going to reverse. Okay. So I'm already seeing calls. So that's the thing. After I took puts, literally, when I told y'all to sell those puts right there, those roll-ups, because I was seeing calls on the flow, I was already like thinking calls. That's why I said the flow gave me a little advantage. But somebody just said it right here. They said inverse head and shoulders. Do y'all see an inverse head and shoulders right here? Exactly. So did you really need flow? No, you just got a later entry, and that's okay. That's okay. And you ain't gotta, bro. Ain't nobody about to be fucking. I know we like to say sniper. Every trade not gonna be a sniper. You know what I'm saying? Like there's going like some people gonna get in later, some people gonna get in early, some people got in right here. Like for example, Sterling. Nothing wrong with that. That's my guy, but he got into calls up here. Why? Because he was seeing calls on flow. So it's all good. People have different entries. People have different stuff, right? It definitely stung. That's my dog. It was his first day using flow, y'all. Give him a break. It was his first day. And normally your first day using flow, I ain't gonna lie, the flow takes over. Because I got caught that way too. The flow takes over sometimes. You just be like, well, fuck the regular charts. I ain't even worried about charting right now. I'm just worried about catching this bounce, right? So I've been there. I've done this plenty of times. But hey, I'm gonna tell you, he caught back up and now he ended the day green. So it happens. Flow definitely be taking over. Like you will be like, bro, but they're buying calls, and you see those big $13 million of calls up here, and you be like, damn, bro, they down $7 million by the time we get down here. And then literally right when you quit or you stop out and you mad as hell, you will see that person that bought that 13 million of calls. He gonna throw in 20 million right here. You be like, oh my, he did the biggest average down. That happens though. That happens on flow. We don't got money like that, so we need to be more. We need that's he the type of trader show to his appointments early. I've been there. Y'all know I've been there. I've been there too many times, especially with my swings. I'm pretty sure all of y'all that took a swing of mine that fucking just went to shit. And then by the end of the week, it's up 600, 700. I'm pretty sure all of y'all that did that. We've all done it before, right? Like we've all done it before. So it's all good. So as we were going down, I took my puts and then I'm thinking calls way before the call setup even happened. I'm already thinking calls way before it happened. Okay, that's the advantage of knowing a different tool. But if you didn't, you see a head and shoulders, you see a breaking structure, you see a breaking. This is where I made y'all enter it. Right here was because I actually caught. Where the fuck I caught this at? I think I caught. I caught one of these candles. I can't remember, but I won like 160% before I even signaled. So I was already up pretty a nice little bag before I signaled. So then when we broke out, retested it, you could look at the exact timestamp. Go look at the trade. I signaled that trade at 11:47 a.m. Look at where this. Look at this. This was at this bounced at 11:45. So like literally, I'm all, like I signaled right at the bounce. You go confirm it, okay? So I signaled at the break and retest. No, so I caught the breakout, I sold, and then I ended up buying it back. And then I continued to hold. I held this whole thing. I trimmed a lot, but I held I literally caught this entire move. But right now, let's get it. So that's all I'm trying to tell you. Look, boom, broke below bull gap support. Mine seeing calls under that support. Boom, created inverse and head and shoulders. You could have caught the neckline break if you wanted to. You would have caught that trade. That's one entry. Could have caught the break and retest. That's two entries. You could have caught the break and structure right here. That's three entries. You could have caught the double bottom. That's another entry. You could, bro. It's so many entries, bro. It's so many entries. It's so many entries. And then we just riding it up. I thought we was going to go fill this gap. I thought Bulls was like really about to. I mean, they did, but I thought they was really about to go crazy. Hold on, guys. All right, can you hear me again? My bad. I'm about to show y'all snow. I'm about to show y'all snow. Did you take calls? So no. So on this one, no, I did not take calls solely off of the flow. Mainly because I ain't gonna lie, the flow was pissing me off. Because I guess a lot of bears were trying to get that continuation because as you can tell, bears like this break and retest trade right here, and they made it look real good. So a flow was a little bit pissing me off a little bit because it was still puts in the mix. I'm like, bro, come on. But bear, I noticed that about bears. They don't give a fuck. They gonna keep mining. They don't care. They don't care. They're gonna keep going. So you have to also take that with a grain of salt. But no, why did I enter this a little early? Maybe for the first, don't ever do this. I think I did go on the 1 minute to get that entry without signaling that one. Yep, I did. There it is. So I actually took this a little earlier. I seen we had like some little compression or whatever. And I took this little range break. I'm gonna teach y'all that. This is a little more advanced though. This is a little range break or whatever. I caught the little range break. It was calls and stuff. We're not gonna talk about that. Don't come to the 1 minute ever. Don't come to the 1 minute. Don't be like me. I'm disciplined. I'm undisciplined on that. Okay. I was supposed to be on that time frame. I did have a headache when I entered right there anyway, because it didn't go straight up either. It was kind of like chopping a little bit. But you see, I got those entries, and there you go. Do that make sense? On that trade? I mean, it's pretty simple. It's really simple. Cool. All right, so let's go to the snow swing. Got you. So let's go to snow. So I'm gonna be completely honest with the snow trade. You know, I speak honesty with everything. So snow was primarily a flow trade. I'm not about to lie. I'm not about to sit here and tell you it was charts because it wasn't 100%. Actually, that was one of the trades that were like 90% flow and then 10% charts. Okay, so make sure that I put that disclaimer out there. So, how did I catch the snow trade? Well, number one, when Amazon had earnings, it was it was a big ass order that was actually kind of made me scared to even take snow at some point. Cause I remember I had the calls for Amazon earnings and I was kind of a little iffy once I seen that order came in, and it was an order of like a very large order of puts, right? And I remembered that because I'm like, nobody that wasn't no retail trade. Nobody's about to put money in that without unless having a reason. So I've always like after we took profits on Snow, I'm like, okay, well, D Dog has earnings. That's like D Dog, Amazon, and Snow, they run together. So you know, if one of them have a bad earnings report. Most of the time, they're going to, all of them are going to drop, or at least one or two are going to drop. So I'm like thinking to myself, I'm like, okay, this was before I even took the trade. I'm like, okay, well, that trader knew something. That was just in the back of my mind. Like he got wrecked on them calls. I mean, on them puts the first time, but he knew something. Okay. So right like 30 minutes before close, he came back on the flow. And I'm like, it's gonna drop. Like in my mind, I'm just like, he knows something. And he probably was caught off guard by Amazon earnings. So I'm like, it's gonna drop. And I like the risk to reward, because I'm like, okay, it's gonna drop. But I'm like, I can't just solely take it just off of that. I'm like, all right, I gotta see something on the charts that's gonna give me that extra confirmation to hold. But mind you, you got a big trader that probably got something wrong, and they come back again. You know what I'm saying? That kind of puts you in that mindset, like, okay, something is about to happen. So that was number one. So I would say that was like actually the exact strike price that I picked was from a flow strike price. Okay. So that's why I picked that strike price. And as you can see, it worked out. It was a little risk, but it worked out. But let's get into the actual trade itself. So for the first part, actually, no, flow, I mean, not flow. What was it? No, it wasn't. This trade was not off the 10-minute. My bad, y'all. It wasn't off the 10-minute. I think this one was off the daily. This is the only thing I seen on the daily that gave me the confirmation. All right. I have my trail line position weird as shit. Okay, there it is. All right. So it was a weird type of trade, but it was really like a kind of like I was looking for like a trail line break and retest kind of. And that was like my only way to take this trade. It was like a little break and retest, a little flag pattern. I remember I drew a flag or some shit like this. And it was like my only confirmation to take puts, but it was 90% flow. So I literally drew like some type of flag. I'm pretty sure it was this flag. I don't remember exactly. No, I drew the trail line first, and then I was like, "Oh shit, this is a flag." And I was like, "Okay, that's like my only confirmation to take puts, because it had already was breaking down the flag." So I'm like, "All right, this is my only confirmation, right?" So that's literally the flow. Like that was a flow trade. I'm not about to lie. Actually, let me go find that trade. Y'all want to see the flow real quick? Real quick, y'all want to see it real quick? I can share the exact trade. Y'all want to see the flow? All right, let's go look at the flow. Just so y'all know that I ain't bullshitting. All right, cool. Can y'all see my flow? Y'all see the flow? Oh yeah, wait, we y'all see charts or flow? Okay, everybody see live options flow? I'm gonna show the exact trade that put me in this. Okay, here we go. I'm gonna reset my filters. All right, so if you don't know what flow is, this is flow. This is what it looks like. Orders come in at the X. Tell you what order, what expiration. This is a whole class. We're gonna go over it. So let's go over flow. So I'm gonna show you the exact trade that put me in there. Okay. Let's go here. All right. So actually, no, we don't need today's price action because okay. Why? All right, cool. So let's go look at Snow. It came in right before close. And I go to this filter right here, bought puts. And as you can see, oh, this is not the right. Well, they got the 8 on here still. Okay. Oh, I only want to see flow from the 7th. Okay, there it is. Okay. So Snow. And then right before close, let's see, filters, bought puts. There we go. So right here on the day, actually, no, where the fuck is excuse my language again. Where is the one I see? I mean, I seen these too, but these was earlier in the day. But as you can see, somebody was putting what 250K and Snow puts. So as you can see, but no, it was another one I seen. That was the exact expo we took. Where is it at? Was it a sold? I don't think it was a sold. No. Where the fuck? Bro, I promise the guy it was on here. Hold on, yeah. Now I'm looking because I promise you it was literally the exact strike that I picked. The exact strike that I picked. Oh, let me go look. What was the strike that I picked on Snow? Let's see, let's see. Bro, 11575, bro. I'm not tripping, bro. It was on here. Hold on, let me make sure, bro. Something off. Or was it on Friday? Maybe I had Friday. I know I can guarantee you it was one on here. Let's see. Maybe it was from Friday. Nah. I seen that on there, bro. I'm telling y'all. Bro, there's no way it's not popping up now. Oh, they playing, bro. They playing, bro. They playing. I promise y'all it was on there. They playing. There is no way. Hold on. Nah. Hell nah. I know I wasn't seeing that because that was a weird ass strike. But I'm telling you, I mean, obviously, y'all see that was puts up there. Y'all see that it was puts, obviously, but I'm telling you, it was the exact put that I seen. Are you fucking kidding me right now? Are you serious? Oh, there it is. There it is. What day was that? No, that's wrong. That wasn't the fucking day. Or was it? Maybe I got my days mixed up and I was looking at the overall weekly flow from last week. Maybe that's probably what I was doing. I definitely did this. This was the play though. Here it is right here. Maybe I was tripping because I got the expiration right. Okay, that's what it was. All right. My bad, y'all. It wasn't the previous days. Because what I do is like I told Sterling today, I like to use other flow as well. I like to remember stuff that happened. And normally, if these people are down, normally at the last minute they will come and average down, and then they will win on that trade. So I don't know what I was smoking. I don't know what I was smoking that I thought it was yesterday. But anyways, what I'm trying to show you, it was right there. So look, check this out. They bought snow puts 15750 puts, and they did this week's expiration, and they put they bought them at $300.60, and it was an opening contract. I always filter my stuff to opening because I want to know that people are actually opening these contracts. And this is a sweep as well. And I'm gonna get more into that, but a sweep means aggressive. This person wanted to get in aggressively. Like they didn't care what they got filled at. They did not care. They wanted to get in this trade aggressively. So as you can see, this person put $600,000 in snow puts expiring this week. And as you all know, this trade fucking hit. Like this, whoever took this trade, they made over $1 million on this trade, even after being down a shit ton of money. So I had this in the back of my mind, like, oh shit, like I remember that trade. And I know that a lot of times they like to hold the trades, like it go down, and at the last minute they go average down into the trade. Like I wouldn't be surprised if one of these newer trades was them. Like one of these newer trades that they took was one of them, averaging down into the trade or whatever, or buying a new strike. Does that make sense? But like this is like how flow looks, and how I like to do it is I like to remember certain orders that stood out. Like if you look at all of these other orders, like this person, her go another trade as well. This person put another 600K. I'm pretty sure this was the same person. But as you can see, they were just hitting different strikes on this. Like they was hitting the 160. They was hitting they just like was putting big size into the put side. So when another opportunity came up for Snow to like have a big move, I thought about that trade because I seen it. Because mind you, I took calls on Amazon because I seen flow of Amazon coming in. So I took Snow calls. But now I remember that people were buying heavy sizes of snow puts. These are not little orders, bro. These are not little kids playing with their daddies. This is real money into these trades, right? So I always think about that, and I'm always worried when it comes to these type of, like, they be knowing stuff like this. I guarantee you, this trader did not trade no fucking, like, excuse my language, but they didn't trade no charts off it. They didn't do this for charts. These are not charts trades. These are, I know something. I know the data. I know something that you don't know, that you can't see. They're not putting millions of dollars in these trades because of a chart pattern. Now, a chart pattern is all we got to work with, okay? So we as traders, we don't have no choice but to suck it up and trade them, but they know something, right? So on this one, yeah. So on this one, I had the puts bought filtered because I remember the only reason why I went to that is because the order had came up. Like it had came up while I was on regular filter. Like I didn't have it filtered just for puts. It had just came up while I was looking at flow one day, and I'm just like, oh shit. Like I was in calls on that time when it came in. I'm like, all right, I'm a little scared. I was like, I'm a little scared of my calls a little bit. But we had more calls towards Amazon. So I just stuck with the snow calls because it was like, all right, well, I like Amazon charts. I'm already positioned in Amazon, and we got more flow, more bigger money onto the, Amazon call. So I'm gonna just rock with snow for Amazon, right? But yeah, so that's that. Like, so I'm not about to sit here and like act like, oh, I was like the best trader because I did it. All I'm saying is I try to be honest with you guys on why I took trades. This trade was 90% flow, 10% charts. I mean, the charts was this little flag, and look, we pumped on Amazon earnings. But as you can see, we pumped on Amazon earnings, but Snow was still bearish. Like it still wasn't trying to like really hold his gains. Because if y'all remember, when Amazon reported earnings, fucking Snow died. Like it literally, like we caught our little money in the morning and then Snow just died. So it was already breaking out of this flag. So it was just looking for that continuation to continue to go down. Does that make sense? But yeah, that's all flow is. It's just, it gives you a little advantage sometimes. So like for example, let me show y'all with AMD. No, was it AMD? Hold on, let me go to today's flow, and I promise y'all I'm done. Okay. I mean, AMD is really a charts kind of thing. It's a weekly bull flag. Y'all can go look. I don't have to show what a bull flag looks like. Um, the lower time frames are bullish, uptrending, dip and rip setup, but also the weekly is in a bull flag. That's why I wanted to swing a little longer. So, but AMD, as you can see, and what I do is, and I'm gonna get into more of this. That's why I like don't pay. Like I'm just, I like to do bought because I want to know that they bought the calls instead of like selling them because selling them is bearish. I like to do bought. I like sweeps. I want to know that people are aggressively getting into the money. I mean, getting into it. Open order is fine, as you can see. Open order. Sometimes if you do open order, it won't show you because like sometimes they split it up to the where you can't really see all of it. So that's why I don't. I'll be, I put open order on and off, and then short expiration. So I'll be wanting to know. As you can see, the flow on AMD today it was okay. It like I said, it wasn't nothing to write home about. It was pretty simple flow, as I could say. You got some AMD sweeping calls, about 300K swept. You got some for this week expiration. You also got some puts. Honestly, I don't. These puts are mixed. I don't know what they were trying to accomplish. Oh, those was earlier in the day. Maybe they tried to catch the move from earlier. I don't know. But like with flow, like you just gotta kind of like take the information and kind of do your own kind of analysis. Cause like I said, even though these are some pretty nice size orders and puts, they get wrecked just like we get wrecked. So I don't lead with flow. And I think that's what traders do. They lead with flow immediately. But NVIDIA was the reason why I took AMD. So here's the NVIDIA flow from today. A lot of fucking calls, a shit ton of calls. I mean, like, that's literally why, a shit ton of calls. Like you can see the flow in NVIDIA is way different from the flow in AMD. Do this make sense? Do you see that? Like these are a lot of calls for one day. And if you look at I mean NVIDIA was down today. So for you to see this many calls, on Nvidia, and I mean like literally they were just buying the shit out of Nvidia like throughout all today. Like literally, let me filter this. Hold on. They were buying the shit out of Nvidia. Look at this. You had somebody sweep the 435s, came right back seconds later, sweep the 435s again, 450, 450, 450. They're just sweeping the shit out of 450s. These are all 811 expirations, 450s, 450s, 455, 455. You also gonna have some puts as well. A very low flow on puts. Not a lot of puts compared to calls. You do have some puts as well, though. These puts, if you look at the time, these were earlier in the day. When that drop occurred, when we got in, as you can see, these were momentum trades, a lot lower size. These were, these were literally on that drop. You got some puts. The flow is a little more mixed on the puts. You don't really have too much follow up after at the end of the day. Literally, actually, at the end of the day, you only had two, like you had this one person. This is the same person right here. You only had one person out of the whole entire day after the end of the day that actually went with NVIDIA puts. So that's kind of, you look at the call side, I mean, they were just smacking it all day long, all day long. So, you know, you got to kind of take and give what you get from the flow. Also, you see this right here. You see $1 million orders. Look at these. Like these are huge. I don't think y'all noticing that these are huge orders versus the puts. $1 million, $1 million. That's damn near a million. These are $1 million positions that's in this play. When you go to the puts, I mean, you do have this. Also, sometimes what happened is this could be a debit spread. No, that's not. This is not a debit spread. This is not a debit spread. My bad. This is actually a pretty large position. Sometimes they hedge it as well. This was from that drop from earlier. They made a nice little bag off of that. I don't know if they swung this. I'm not gonna lie. This was an hour before close. So it was an hour and a half before close. So I don't even think they swung this. I can't tell. I have to go back and check later on. They might not have swung this position. But who knows? I don't know. Like, I don't know. Just because he got 600K in his account to buy puts, he can still get wrecked. So it just depends. Okay. He was probably playing the earnings of the SMCI or whatever. And so, you just gotta take what you can get from it. But I'm gonna go more into flow this weekend because like it's like I can't really like there's certain things that you want to look at, like the time, the way the orders are coming in, the strikes, all of that. Like it's the price, the IV over here. Like there's certain things that you want to look at within the flow. You can't just like look at the flow and say, all right. Like actually a good example of this is right here, which gives me a little more confirmation about calls, is the fact that this person that bought, that's why I said I don't think he swung this, because this person that bought puts, the IV was decreasing on his contracts. So that normally gives the indication that the stock price is actually not going to go his way because the IV is decreasing. Like it's a whole nother, it's a whole ball game when it comes to this with flow. Like, do you need it? No. But will it help you get into trades a lot earlier? Yes. Will it help you get better trades? Yes. But is it a one size fit all? Is it going to make or break you? I became a $1 million trader without flow. So like it's not, this is just helps me a little more with putting in heavier size and all of that. And not everybody that be on flow is big money, like smart money. My trades pop up on here. Literally, if I buy a trade, it's on here. I had one person say, Jay, you only get your plays from Flow. As soon as you bought that trade, I seen on Flow that trade was on Flow. I'm like, that was me. Oh yeah, of course you go. It was me that got on. That's me on the Flow. So, so. But other than that, I will see you guys tomorrow. This platform is called TradyTix. It is like $70 a month. You can use it. They got other ones out here. They got Flow Algo. Flow Algo is $200 a month, I think. And then the other ones are like $150. Which one do I prefer? Honestly, I'm surprised. I'm surprised that the cheapest one is actually the one that I prefer more. I actually like this one better than Flow Algo. I know Flow Algo looks cooler, but I actually like this one better. So it gives I don't know. I like this one way better. I don't know how to explain it. I just this one it just makes my life a lot easier than Flow Algo. Flow Algo be getting on my fucking nerves because they don't have all like the features that I be wanting to like filter it and stuff. So if you got an extra $67 a month and you want to invest into Flow, there you go. Um, are you going to add? Yeah, I've been trying to do that. I swear I have. I literally have been trying to add the little because they got it where they have these trades. If you don't want to pay for it, so I'm paying for it, I can add it to the Discord where all of these orders, the good ones, they all come to the Discord. I'm actually working on that. So in about like another week or two, this will be in Discord, no additional charge. If you don't want it, if you don't want to pay the $60, these will be this will be in Discord, no charge. So I'm just trying to figure out how to do it. I'm probably gonna contact them and try to like have them set it up sometime this week or next week. But other than that, guys, see you guys tomorrow. Yeah, we could do more training recaps and everything. I know I haven't did one in a while. So yeah. All right, guys.